Rohr here with an early global view on Thursday, December 18th, 2014. It's currently 6:45 a.m. U.S. Central Time, and yes, it's another global view because so much is on the move, even the foreign exchange this time, that needs to be covered. And there are a lot of macro factors afoot, not the least of which was the interesting misspeak, as usual, I guess, by Janet Yellen yesterday, but that left the Fed influence very constructive. And right into this morning's speech from Russia's Vlad the Peacemaker Putin, who is giving some real comfort to his folks and by extension the markets. So, what does all this mean to the markets? Well, we've got the S&P 500 March future, hourly chart on the left, 30-minute on the right, as usual. And this is exactly what it meant, that a market that was anticipating some still somewhat accommodative stance from the Fed had already improved yesterday morning from the beating that it took on Tuesday, late in the day. These were all below. We had mentioned 1985 was our key lower congestion, below which the lead contract S&P might have a bigger problem if it were to remain down below it later on this week. And this meant, of course, this 1985 is not as bad as this slippage looks, because don't forget, the December contract, that's still lead contract until it expires on the close today, trades at a $7 premium, but even that was down around 1970 to 72 late in the day on Tuesday. But during the day on Wednesday, of course, once this was above 1985, the December contract was well above it. And what happened was, on the influence of the release of the FOMC statement at 1 p.m., the market immediately saw the continued accommodation, pushed up rather smartly, was actually back above 1995, which in its way was another key sort of level, because that represented an up break out of the overall downward channel since the high back here at 2070. And that, of course, is equivalent to the 2078 set by the December contract. So being out on an up break, that looked pretty good. However, in the next half hour, as Ms. Yellen shared her thoughts, it dipped back down below 95, and that's tolerable on a breakout. You get a clean out below it, even to as low as 1987. But of course, unless it was actually going to be back below 1985, especially after this gap up from 1987, from the closing increment before the 1 o'clock release of the FOMC statement, it was still going to be okay. So that's that. So, for future reference, what does this mean moving forward? And the bottom line is that the S&P 500 is now up $25 on the day, up to 2033. So we were looking to see, interestingly enough, the other key level back above 1985 and 2000 psychologically was the old high from back in September around 2013. So we were looking to see if this market could get back through recent highs to get above the 2013 level. Well, obviously it liked what the Fed had to say, and Mr. Putin, sounding somewhat confident in his economy without sounding too belligerent militarily, is helping the markets as well today. And that pretty much does it for the short-term view of the S&P, because your next resistance on lead contract, and we'll now watch March against it, is up at 2036 to 40. And as you can see, going back here, that's also somewhat important congestion on this chart. Next bigger levels above it are 2050 and 2060.